Hello and welcome to Business Incorporated Live on Channels Television. Here's what's coming up in the next 55 minutes. And we see Nigeria's economy sustains growth in the third quarter of 2024 at 3.46%. And all the way in Libya now, we see the economy there. They're planning to raise production of oil. We see for the Central Bank of Egypt, their assets rise to new level. All right, now let's get a check on what's playing out with most of the markets that we track. But we see right here in Nigeria, the GDP, that's new data. Nigeria's GDP grew by 3.46% year-on-year in real terms in the third quarter of 2024. That's according to National Bureau of Statistics. This is higher than the 2.54% growth in the third quarter of 2023 and 3.19% growth in the second quarter of 2024. The services sector led the growth, expanding by 5.19% and contributing about 53.58% to overall GDP. The agriculture sector, that grew by 1.14%, while the industrial sector saw a significant rise of about 2.18% compared to the third quarter of 2023. The services sector contributed a larger share to the GDP in the third quarter of 2024. All right, let's get a check on what's playing out with gold now. 1% today, weighed down by profit taking after five-session rally. We see spot gold fell about 1.52% to $2,671 per ounce, while U.S. gold futures shed 1.52%, $2,672. That's for gold. Spot prices had hit their highest since November 6 earlier in the session. Spot silver, that fell by 1.7% to about $30.77 per ounce. And now let's get a check on the oil market. Now, 0.35% drop. That's for Brent, $74.91 a barrel. US WTI crude, that's down about 0.35%. And definitely still geopolitics determining what's playing out in most of this market. Well, join us now to get an outlook for these markets. We have Sunil Dixit, technical research analyst, SK Charting. Hello, Sunil. Okay, we'll still try and get Sunil on to tell us what to expect for this market. But to other stories now, we see the presidency says that plans are underway for the complete privatization of 3 state-owned refineries, which include the Port Harcourt, Warri, and Kaduna refineries. Special advisor to the president on media and public communications, Sunday Diary, disclosed this in a bulletin released earlier. Said although he did not specify a timeline for its execution, Mr. Diary explained that the full privatization of these refineries is in the works for their revitalization. The 4 national refineries, which have remained non-functional for over 4 decades, despite trillions of naira invested in them, have left Nigeria reliant on imported petrol. In August this year, the Nigerian National Petroleum Company Limited announced plans to engage private companies for the operation and maintenance of its refineries in Kaduna and Warri. And Asset Management Corporation of Nigeria owes the Central Bank of Nigeria about 3 trillion naira, which it must pay back before it closes down based on the AMCON Act, Amended Act of 2021. This is the crux of a stakeholders meeting between the executive of AMCON and the Senate Committee on Banking, Insurance, and Other Financial Institutions, which was held in Lagos, southwest Nigeria. Take a listen.
We're just about 24 months before the winding down of Asset Management Corporation of Nigeria, AMCON. The Senate Committee on Banking, Insurance, and Other Financial Institutions believes that it is time to start giving thought to transitioning beyond AMCON, navigating the path to sustainable financial stability. The retreat begins with stock taking.
To date, the corporation has made recoveries in the sum of 2 trillion. Of the total recovery, cash recovery represents 44%. Most of our recovery efforts and cases are stuck in the court within the different levels of court: the High Court, the Court of Appeal, and the Supreme Court.
The host chairman, Senate Committee on Banking, Insurance and Other Financial Institutions, Senator Adetokunbo Abiru, says he appreciates the position of AMCON. However, he points to the reality that after 14 years of existence, the lifespan of the corporation has to end in 2026.
AMCON was established at a time of considerable turmoil in the wake of global financial crisis of 2008 to clean up the books of many ailing banks. So it can be said that as a result of AMCON's interventions, thousands of jobs were saved as a number of banks were rescued from the brink of collapse. However, even as we acknowledge AMCON's successes, we must also accept the reality that AMCON was not designed to be a permanent fixture in our financial landscape. And I'm sure the leadership of AMCON and staff of AMCON here present, you will agree.
Paying the interest recapitalization, which stands at about $3 trillion owed CBN in about 24 months, it seems like a huge task for AMCON.
Even if it appears and they don't meet up by 2026, at least when we are coming up with a structure that will give us a definite time that they can actually achieve this. Of course, I mean, an extension can be made, but clearly we must just be sure that whatever extension we are giving is a practical and realistic extension.
Issues raised here, such as delay in the judicial will, have to be escalated to accelerate recoveries if AMCON must meet up with its responsibility before winding down.
All right, now, so yeah, we have that data. Nigeria's GDP, that's sustained a growth there, about 3.46% year on year. That's in real terms for the third quarter. We have that data. I was out sometime late yesterday, and now we have to break it. According to the National Bureau of Statistics, this is higher than the 2.54% growth in the third quarter of 2023. And the 3.19% growth in the second quarter of 2024. And all of this is happening despite the rate hikes so far. But joining us to discuss this and what to expect for the rate-setting meeting, that's tomorrow. That has started today. We'll get a decision definitely tomorrow. Joining us now, we have Mr. Tajuddin Ibrahim, as a Director, Research and Strategy at Chapel Hill Denham. Great to have you on the show.
Thank you for having me on the show.
So how are you seeing this data? First of all, did you expect this?
So I would say that we expect it because our forecast at Chapel Hill Denham is for the economy to grow by 3.50%. And now that the growth number has been reported at 3.46%, I would say it is broadly in line with our expectations. And it is stronger in terms of, Bloomberg consensus. When you look at what, some other economists were forecasting, we have an average forecast of about, 3.0% by, Bloomberg consensus. So the growth rate is much stronger than, market expectations.
And definitely, with a population of over 200 million, should we be celebrating this growth rate we're seeing? Or what should be our growth rate, really?
I think we should not be, celebrating this growth rate, considering that it is just, very similar to what we have in terms of, population growth. But I reckon that it is a progressive growth rate when you consider the growth rate that were recorded in the second quarter and also in the first quarter. And speaking to what sort of growth number should Nigeria be reporting, given our large population and given the huge resources that we control as a country, I think Nigeria should be reporting nothing less than double-digit real GDP growth. assuming that we put all of the resources that we have together, both human resources and also non-human resources, particularly speaking about the natural resources that we have, assuming that we are able to effectively put all of those into action, Nigeria, naturally speaking, to my mind, should not be talking of economic growth that is less than double digits in my view. And I think possibly a worst case scenario is for us to be recording high single digits of like 9% or not less than 8% over the medium to long term. But we have a long way to go to achieve all of these numbers.
All right, what does this tell us about the rate hike so far? I think we've done about over 800 basis points, and we're still seeing some kind of growth, if you're comparing this quarter on quarter.
Yes, I think about the rate hike, what this growth number, tells us is that, it is saying that, the impact of the interest rate increases by the Central Bank of Nigeria is not, the same across, key sectors of the Nigerian economy. The numbers published by the National Bureau of Statistics have shown that, the growth rate of some sectors have, declined over time, while the growth rate of some sectors have increased, over, a similar period. The telecommunications sector in this case has recorded much lower growth rates compared to what we saw about 6 quarters away. While on the other hand, the financial institution sector has actually seen the strongest, growth rate within the past sort of 7 quarters. Specifically speaking, the fastest growing sector in the third quarter of this year is the financial institution sector. So which means that the impact of the rate hike is uneven, when we are looking at, the broad sectors of the economy. So I think that is what is playing out. It has been broadly favorable to some, sectors, while it has largely speaking dampened the performance of some other sectors. And I reckon that the financial sector in this case is the winner.
And let's try to imagine now that we didn't have over 800 basis points of rate hikes. Would the growth be higher?
So the growth, to my mind, naturally speaking, should have been higher, because what has happened is that the higher interest rates have sort of slowed down, the plans of companies, generally speaking, in terms of borrowing to expand, businesses. There are a lot of companies that I believe are currently delaying, their investment plans for growth, largely because we have an elevated interest rate environment. That is also indicative when you look at what is happening in the capital market. Naturally speaking, you will see more companies come to the capital market to raise debt capital to support, their business growth, to acquire equipment for expansion of their businesses. We currently are seeing a slowdown in that regard. And I think that is what, we will see over the next, couple of quarters, in as much as monetary policy remains tight. By the time it begins to, go dovish, most likely we will see a return to a much stronger growth rate by then.
This shapes the decision tomorrow by the MPC, that's the Monetary Policy Committee.
I think the monetary policy, tomorrow would have no option than to remain, tight in terms of, monetary policy. And I think, the stronger growth rate that we have seen in the GDP growth for quarter 3 is another compelling case for them to remain, tight in their monetary policy. And most likely, we are going to see them increase interest rates by what looks like 25 to 50 basis points, just to curb the rising inflation rate that we have seen so far this year.
And what are you seeing for the fourth quarter report? Do you think we'll see this growth sustained going into, we're in Q4 now, but when we get the Q4 results?
It is important to point out that the Q3 2024 economic growth, which printed at 3.46%, is spot on the same growth rate that Nigeria reported in the fourth quarter of 2023, which was, a festive, quarter, and so was underpinned by festive, spending. So if we are recording 3.46% in the third quarter of the year, it looks to me like the final quarter of this year will be much stronger in terms of, economic growth, bearing in mind that it is a seasonally strong, quarter in terms of, the festive activities and also the spending that, is related to, festive activities by Nigerians and also, by other, people that travel down to the country to celebrate the festive period. So I reckon we could see, much higher growth rate in the final quarter of this year. What looks like 3.5 or 3.55% comes to mind in that regard.
And also, we also have more data from the NBS there, and that's for unemployment. And that came about 4.something%. But, looking at that data, we know interest rates, they have an impact on growth and employment. So looking at the data, that unemployment data there, what is it telling us so far?
Unemployment data, we bear in mind that they changed the method of calculation. 4% plus is to my mind not really the kind of unemployment rate that we have in the country. But for the change of methodology, over 4%, is the number that is being reported. I think that number is not fully reflective in my mind, of what Nigerians are facing. I reckon the number, is much, higher than that. And it speaks to what the government has to do. We have to move away from, methodology induced, impact on our economic indicator. We should focus more on direct intervention in the economy by providing more jobs, to Nigerians, particularly the youth, and also importantly creating the right, enabling environment for the youth to be able to operate and also lift the growth rate of this country via several activities. So I think, that unemployment rate, to my mind, is reflective of just, changing methodology. In reality, I reckon it is much higher than that.
All right, thank you so much. Always great to have your perspective. That was Mr. Tajuddin Ibrahim, Director, Research and Strategy at Chapel Hill Denham. Thank you so much for coming on.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. Welcome back. Well, let's head straight to the markets now and see what's playing out with most of the markets that we track and the local bourse and for the global markets that we track. Great to have you, Anete. So it's a marginal loss at intraday for the local bourse, 0.04%, and a flurry of data out today.
Happy New Week, Ladi, the final week of November.
Right.
Of course, let's just say officially it's a month to Christmas. That happy time of the year.
Yeah, and I'm still waiting to get that feeling. I don't know if you remember that euphoric feeling of Christmas. And we used to get it earlier, in the month.
In the Ember month.
In the Ember month. So as a kid, when that season came, you could just feel Christmas. But I don't know, it's so hard.
Well, Ladi, I'll tell you that times have actually changed. There's so much pressure almost everywhere around the world, not just in Nigeria, but Nigeria's case is rather a very different scenario because, first of all, yesterday we saw, let's just mention one of the banks that's very familiar with the lighting up of Christmas
Right.
We saw that on Channels Television. So
that brings some kind of feeling.
But the reality is just because of the economic pressure, no thanks to inflation, high cost of everything.
Right.
But of course, the market is where you make your money. So let's talk more about the market.
Fantastic.
And see what is starting from last week. We saw the market making itself in the green. And that green was about 0.13% for the all-share index. But at intraday, it is 0.04% down, 97,000. So it has receded from the 98,000 points, which it had dropped, which it had increased, but then dropped to about 97,788.88 for the intraday market numbers on Monday. And for the Johannesburg Stock Exchange, it is 0.13%. But we're still talking about Nigeria's stock market. And so far, for the year-to-date gain, it is a plus 30.8% in the green, while month-to-date, we'll still talk about the month of November, which is gradually fading out, 0.2% in the green. And so far, the market is in positive territory. Now, let's talk about the other two markets on the African continent. EGX 30 down 0.17%, and for the close of Friday's trading session, Nairobi Stock Exchange All-Share Index in the green, 0.03%. So it's kind of a mixed picture for African markets for intraday market numbers that we are tracking at the moment. So now, from the equities market, we talk about what is the outlook for the week. First of all, at the moment, the Central Bank of Nigeria's Central Bank has begun the final meeting for 2024. Of course, we've seen about 850 basis point increase in the all-share, not the all-share index, in the country's inflation. Inflation, when you talk about inflation, the most recent inflation number, which is for the month of October, was at about 33.88%, up from the 32.6, about where it had climbed to gradually after a 2-month pause. So right now, the Monetary Policy Committee is looking out for what level or what is the next step for them to take in order to tame inflation. Is it going to be a hike? Is it going to be a hold? Or is it going to be a cut? Your guess is as good as mine, but that outcome will be announced tomorrow in the afternoon of tomorrow. Now, for the bonds market, the MPC meeting is also, we will still talk about the bonds market there before we move over to, so now, the MPC meeting outcome is also expected to determine the market direction for the bonds market. Last week, we saw the Debt Management Office conduct the November bond market auction there, which actually came in very strong. So that number is really, really strong for that market. And also for the Treasury bills market, renewed demand is also anticipated in the secondary segments of this market. We're also expecting that there's some inflow from for October FAC, which is going into the financial system, as well as inflows from the open market operation, what we call the OMO. So that is also expected to play into the T-bill segment of the market. And for the stock market here, we were talking about cautious trading is also anticipated, and that's because investors will be looking out for the outcome of the almighty CBN Monetary Policy Committee meeting, which of course is currently underway. And for the other markets that we're looking at, money market, we expect that, like I mentioned, about 977.98 billion inflows from FAC disbursement, as well as the 5 billion OMO maturities is expected to boost system liquidity. And then the Forex market, where we'll be talking more about the Forex market, the dollar pressure. The Naira has been hammered by the dollar. So far, we're trading at about above 1,600 at the official market and about 1,700 plus at the black market or the parallel market. So the supply tightness is still what is affecting the pressure on the dollar. But on one side, we see that the country's FX reserves is still climbing and well into the $40 billion mark. But to talk more about the Forex market, particularly the Forex reserves, Forex reserves against the Naira, let's bring in Senator Audu, Forex dealer and analyst with Access Bank, to give us more details about that. Thank you for joining us, Senator.
Good afternoon.
Okay. Yeah, Senator, there seems to be a mismatch. I mentioned this last time, but it seems to be unabated. the Naira is still going sideways away from it being recovering in spite of all of the measures taken by the central bank. So, but on the other side, we see an accretion, a sustained accretion in the FX reserves. So can you tell us why this is? Because last week we also saw the central bank intervening at the FX markets.
Yes, so as you rightly said, the CBN has continued to intervene. We saw the CBN come in multiple times last week to intervene in the FX market. But as we've seen in that market for some years now, the demand has continued to outweigh the supply. The FX rate has actually stayed relatively stable between the 1.6 to 1.7% handle or range, and the CBN has tried to keep it stable within that range for some time now. So the FX rate on Friday closed at 1,693 naira 39 kobo, relatively stable from where it closed the previous day. Regards to where we see this exchange rate going, we do see that the CBN's resolve is strong to maintain the rates at those levels. So we do expect that we'll see rates at these levels in the short to mid term. With regards to where the CBN looks to get dollars, we did see the Debt Management Office announced recently that a Eurobond will be issued by the country. So that should, of course, help to shore up our reserves and help the CBN's war chest in its quest to maintain the exchange rate at stable levels. We've seen the reserves at just over 40 billion, and those levels are considered stable by local and international counterparties.
Okay, so let's sidestep away from the FX reserve and talk more about the Monetary Policy Committee meeting, which is expected. The outcome is for tomorrow. So what is your guess? A consensus says between 25 basis points to a 50 basis point additional hike. What's your take on this?
Yes, so at Access Bank, our projections are in line with that. We do expect that the Monetary Policy Committee would look to take the MPR up, the monetary policy rate, from the current levels of 27.25% up by 25 or 50 basis points to 27.5 or 27.75%. And the reason for this estimation is as follows, and that's largely because we saw an increase in the inflation rate by about 118 basis points from 32.7% to 33.88% last week. So we do expect the MPC to respond in some way to keep the inflation level stable.
Okay, so finally, before I let you go, Senator, what's your outlook for the fixed income market for the rest of the month of November?
For the fixed income market, we started to see some bullish sentiments closing last week. This was despite the fact that there were two auctions. Early last week, we saw the bond auction on Monday and the NTB auction on Wednesday. Both auctions were oversubscribed and over allotted by the central bank and the Ministry of Finance Debt Management Office. And even following those two auctions where over 1 trillion was sold, we did see interest in the secondary market. And this is largely as a result of the fact that we expect FAC inflows to come in this week. The meeting has been held. About 1.4 trillion was approved by the federal government. We do expect that market players will continue to remain bullish, largely because of those FAC inflows that we expect to come in.
Okay, Senator, I think we'll leave it there, of course, and look out for the Central Bank's Monetary Policy Committee meeting, as well as Nigeria's all-share index closing for Monday. Thank you so much for your time.
Thank you, Anete.
I was Senator Audu, Forex dealer and analyst with Access Bank for the market numbers at intraday. Okay, let's move over to the Middle East, where we see positive sentiments dominating the activity at intraday. The Dubai and the Abu Dhabi index both in the green, but this is the highest so far within the two markets within the region, within that region there, 1.12%. And now look at the other sides of the market. The Tadawul was down, so that's the only laggard there, 0.38% down at intraday, 11,819.83, while the Qatari Stock Exchange is in the green, 0.03%. Okay, so now let's talk about the US market, where we see the stock futures is climbing. Of course, this week is Thursday would be Thanksgiving, which is one of the biggest holidays for the U.S. You see lots of travels day. That's one of the busiest period within the United States there. But ahead of that holiday, which is actually going to be a 4-day holiday, but not just after Thursday, most offices will be closed there. But just right before that, the Dow Jones Industrial Average, the S&P futures, and the Nasdaq were all in the green, and then they're looking forward to so many expectations there. We saw last week that the markets had finished right kind of like in the mix, but so far for the stock futures ahead of the opening bell today is pointing upwards for the world's biggest economy for Monday. And finally, let's talk about the Asian markets. So we see they also ended positive. Starting first with the Nikkei 225 back in the 38,000 points, which is a drop. Of course, we see that there was we saw a flurry of economic data across the region there. So most of the economic data were kind of in the favor of the market, particularly for the South Korea's stock market, where we also see that the central bank's rate decision is due for Thursday. We also see so many economic numbers are coming out. For the Hang Seng Index, it was in the red, 0.41% for the close of Monday. And for the other side of the market, the Shanghai and the Nifty 50. The Nifty 50, the story is all surrounding the Adani Group. It first had an impact on the market, but so far for the close of Monday's trading session, the market is in the green, being able to shake off some of that, the news around that scandal involving Gautam Adani, the chairman of that company. While the Shanghai Composite was down for close of Monday's trading session, 0.11% at 3,263.76. So, Ladi, that's it for the markets, and quite interesting numbers. Economy, and everybody's counting down to the end of the year.
Yeah, the countdown begins at this point. Thank you so much, Anita, for giving us most of the details. Maybe investors might get a Santa rally. Thank you so much, Anita. Let's get a check on what's playing out with the metals and oil market. Now, let's get a sense of what to expect. That's for pricing this week. And we have Sunil Dixit. He's the technical research analyst with SK Charting. Hello, Sunil.
Hi, Larry.
Yeah, great. Great to have you, at this time. But, talk to me. What are you expecting for price movement for gold? What key price levels should we be watching?
The gold market has been fluctuating quite a lot and obviously in a wider range, given the deteriorating geopolitical crisis on Russia and Ukraine front. And also the dollar index gap down has added to fuel to some fire in gold that has tested 2720 as expected. And now we see some downward retracement towards support zone 2650. It has tested a low of 2660 intraday. And we are counting on 2640 support, which is a turning point for further direction in gold. And any move below 2640 will attract sellers that can push the metal down towards, let's say, 2600. And if that zone is broken, bears will, of course, gain domination, aiming for 2515 on the major front. And any consolidation above 2720, as far as 2640 holds, we are looking towards our bullish targets extending towards 2790. So 2640 is the turning point as of now.
For oil prices?
Oil is also gaining traction, and the pivot point where we are monitoring is 70.50. Above this, 72.50 is expected. And if 70.50 is broken, then $2 downside more is expected, aiming 68.50.
All right, thank you so much.
As of now, it's bullish.
All right, thank you so much, Sunil Dixit. He's a technical research analyst at SK Charting. Tell us what to expect for gold prices and oil. Thank you.
Most welcome, Larry.
All right, we'll take a break now. When we come back, we'll get a check on what's happening in Europe. That's to the moment. Just stay with us. All right, now let's get a check on what's happening in Europe. See, the biggest climate conference, COP29, that finished on a note that raised questions about the future of climate diplomacy. What role, if any, does Germany play in the future of climate negotiations? We'll find out more now with Vada Emrah there in Berlin. Great to have you, Vada. So how is Germany reacting to the $300 billion commitment made at the end of COP?
Thanks for having me, Laddie. Well, this year's COP climate talks wasn't business as usual for Germany. Following the collapse of the ruling coalition here, Chancellor Olaf Scholz bowed out from the summit and was absent in Baku from climate negotiations. But Germany has, in recent times, ramped up their commitments to slash greenhouse gas emissions. At the climate summit, Germany did reinforce its dedication to climate policy, but had a very cautious approach when talking about finance. Comments on this topic have come mostly from the Green Party. Foreign Minister Annalena Baerbock pointed out that while Europe has to live up to its responsibility, and by this she means responsibility of historic emissions in the last 100 years or more, so Europe does definitely have responsibility globally when it comes to emissions, but cautioned against making promises Europe can't keep. And this notion has been repeated many times over. The promise of $300 billion by advanced countries for developing countries, this is to start from 2035, echoes the promise made of $100 billion in climate financing by advanced countries to developed countries that was meant to start 4 years ago in 2020, but was actually realized for the first time only this year. So the reaction from Germany has been a bit cautious.
I know the EU's long history of CO2 emission, that puts it in a unique place of responsibility. Will it come through in terms of funding?
Well, this is the big question, and one that creates a lot of confusion as well. Let's talk first about the emissions. The EU is one of the top contributors historically for climate change and greenhouse gas emissions, coming second only after the US. So these two areas, the US and Europe, carry more responsibility for their activities in the past, more so than China or India or Russia or Japan. And the people suffering the most are from vulnerable islands that are on the forefront of floods and rising seas, and they appear to be really unhappy in Baku. And this is because developing countries openly said that $300 billion is not enough. The costs have now shot into the trillions. India's negotiator Chandni Rai called the deal an optical illusion. Many similar comments emerged as well, saying this deal was more for saving face than anything else. But the second part of your question about funding, that's a big question mark, because there are promises made such as at conferences such as this one, but it's years before they're ever actualized and realized. And by then, it's might be a bit too late. And as COP wraps up, talks begin in South Korea on how to curb plastic pollution, but the discussions there have also been plagued by divisions.
All right, let's turn to the markets now. What are investors looking at today?
Well, Asian shares are looking good today as the market is reacting to the announcement of Trump picking millionaire Scott Bessent as U.S. Treasury Secretary. He talked about prioritizing tax cuts, including slashing taxes on tips, overtime pay, and Social Security benefits. Investors in Europe are keeping a close eye on speeches from ECB's chief economist Philip Lane and ECB member Gabriel Makhlouf. Today, results of the November Business Climate Survey in Germany are to come out. Investors are also going to be following that closely. The dollar dipped and the euro edged up. Germany's November inflation first estimate is also out this afternoon. So overall, a data-packed week ahead.
All right, we'll definitely be looking out for that. Thank you so much, Vada.
Thank you, Maddie.
Yeah, let's get a check on what's playing out. Other stories now. See, the African Development Bank is celebrating its Diamond Jubilee, and the bank says it marks 60 years of driving social and economic transformation across the African continent. The Southern African Regional Celebration held in Johannesburg, South Africa, and brought together leaders, stakeholders, and partners to reflect on the institution's journey and its vision. Our South Africa correspondent, Innocent Somoza, has more.
It was indeed a time of reflection and celebration. The event highlighted the bank's significant contributions to Southern Africa's development and honor milestones in infrastructure, education, health, and sustainable development. The celebration also unveiled the bank's vision for the next decade, including initiatives in renewable energy across broader infrastructure and digital transformation.
We have approved a new 10-year strategy, and we will continue with the strategic vision of the high fives, because if we achieve the high fives, we will be able to achieve 90% of the SDGs.
As the African Development Bank reflects on 6 decades of progress with a focus on innovation and sustainability, the question remains, is the African continent making progress in addressing some of the economic disparities that are facing the continent?
It's a mixed bag of outcomes. There are certain African countries that are making good progress, like Ethiopia. There's a lot of good things that we can learn from each other in terms of economic development. And I do think that all the things that we've committed ourselves to, industrialization of the continent, we've got critical minerals here, lithium, which are quite important for the decarbonization of the world. We should be producing electric vehicles here, batteries here.
Your Excellency, if I hear you correctly, you're speaking about exogenous factors. Are you saying that we're dealing well with endogenous factors?
Well, you know, the problem that we have is that as we meet the exogenous factors, which creates instability, which deepens poverty, and, you know, dealing with all these shocks that come, you know, the climate shocks, you know, and all this, then, you know, obviously, you know, there will be marginalized segments of the society.
The Development Bank of Southern Africa took some time to send well wishes.
I want to see more impact, and I want to see the realization of the high fives that the African Development Bank, focuses on industrializing Africa. So an industrialized Africa, a powered Africa, a fed Africa, an integrated Africa.
Delegate says that the next chapter promises to bring even more transformative change to the region. We can only hope that this will not be another talk shop. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
Thank you, Innocent. Well, the Central Bank of Egypt is reporting a significant increase in its total debts, which reached 6.21 trillion Egyptian pounds by the end of October 2024. That's up from 6.09 trillion Egyptian pounds in September. According to the CBE's monthly financial position reports, the central bank's investments in the capitals of international financial institutions, that stood at 26.2 billion Egyptian pounds. Meanwhile, CBE's investment in the capitals of subsidiaries and associates, that totals 79.09 billion Egyptian pounds. The National Oil Corporation of Libya has announced plans to draft a 3 to 5 year operational strategy aimed at increasing oil production, with a goal of reaching 2 million barrels per day by the end of next year. The initiative focuses on creating a clear roadmap to achieve long-term objectives and aligning the strategies of the corporation's subsidiaries and with operational goals. Libya's current oil production, that stands at approximately 1.3 million barrels per day. The NOC reiterated its aim to strengthen Libya's position in regional and global markets while adapting to shifts in the global oil sector. All right, now let's get a check on what's playing out with the crypto market. Now we see with Bitcoin back in the green after the sell-offs we saw over the weekend. Well, we still have pockets of red right there showing coin 360. That's showing what's playing out there, the color of the market. And we see XLM that's given up some of the gains earlier following XRP's monster run there to $1.49. Let's look at the top cryptocurrency we track and the sentiment in the market, how investors are feeling. We know it's a very greedy market right now, an extreme greed. That's how investors are feeling in this market, extremely greedy at this point, seeing Bitcoin nearing that $100,000 mark, and most of the altcoins there hitting highs not seen before, and some trying to get back to highs that they've hit before. 82 points, that's for the Fear Greed index there. And we know how investors like to use the Fear Greed index, trying to time your entry and exit from a market. Let's look at the top headlines now in the market. So I will see a lady accidentally threw away her boyfriend's 569 million pounds of Bitcoin. He claimed to have mined the cryptocurrency on his computer. That was back in 2009 when Bitcoin cost not much. Later forgetting about that. You see now 8,000 coins. He mined 8,000 coins with a value right now of about 569 million pounds. But the computer that was holding that information, the key to that wallet, his girlfriend threw it away. And now he's trying to get it back at this point. So talk about a big loss there for that guy, a big headache there. Then we see Bitcoin seeing about $6 billion worth of outflow out of centralized exchanges. So that's normally bullish news when you see investors, sending money out of crypto exchanges. That means they're not looking to trade that at the time. So maybe it might signal they're trying to hold. So we're seeing exchanges there, $6 billion of Bitcoin out. And that's for one of the data from Chain Analysis there. Then we see the developer of Axie Infinity, they're looking to cut 21% of their workforce. And we know that this whole tech space, that has seen a lot of job cuts this time. And this time we're seeing it for this cryptocurrency, that Sky Mavis, that the developer of the blockchain-based game, Axie Infinity. They're saying they're going to lay off about 21% of its staff, roughly 50 employees, as part of efforts to streamline operations and focus on core products at this time. So that's the one of the top headlines. We'll see if that impacts the price of Axie Infinity. Now that we're seeing most of these coins enter that bullish territory. All right, if we look at the top cryptocurrencies that we track now, we see Bitcoin, $98,303, up about 0.60%. Over the weekend, it was quite the sell-off over the weekend with Bitcoin there. It did get back to about $98,000, $97,000, but it's still really high, at this point, depending on where your entry point is, But yeah, we saw pullbacks, but now we're seeing Monday, the markets starting to gather steam again. And it seems it's a trend we've seen so far. The weekends seem to see some kind of sell-offs with this new monster run that we're seeing with Bitcoin. Ethereum, $3,517 per coin, up 3.68%. Is a big mover today, then a performer when you compare that with Bitcoin. Then we see the Binance Exchange coin, BNB, $667.86, down 0.62%, not following the trend we see with most coins at this point. So will BNB be able to break past the $600 range? I'm sure investors will be watching out for that. Cardano, $1.05, big run there. These two, Cardano and XRP, I see them as a stable coin for the longest time. XRP was stuck at that 50-cent range for the longest time. Cardano, that was stuck about 30 cents. But now we've seen a big run, and with the likes of Cardano also crossing that $1 mark for the first time in a while, after hitting a high of about $3. We've seen coins under that's inside the Cardano blockchain, the likes of SNEC, the likes of the other decentralized exchange that's on the Cardano platform. They have also had a big run following what we see with Cardano there. So 1.59%, XRP, $1.49, up 1.04%. Really big run there we've seen for XRP. And XLM, from 2017, around that time, they had a relationship, that's with XRP and XLM. When XRP makes a move, somehow Stellar Lumens as XLM, that follows. And we've also seen that play out in the markets in this season also. So definitely a lot playing out for the markets today, and investors will be watching out for key data coming out from the US. That's going to drive sentiment, PCE data, and that's the data that the U.S. Fed, they like that data a lot, personal consumption there. So that's going to give investors some kind of outlook for what the U.S. Fed, what they're going to do with that's the rates at this point. It's all about rate setting at this point. So they're going to be watching out for that data. If it comes in as expected, then who knows? It might be a tailwind for the crypto market if that data comes out and shows that the U.S. Fed might actually stay dovish at this point, or could it be hawkish, dovish? Well, it all depends at this point. But we'll all get clarity with those when those data come out there in the U.S. and definitely that would drive sentiment in this market. It's still all about the Trump trade at this point. We're still seeing investors in that Trump trade euphoria. That's in the crypto market, and that seems to still be driving sentiment in the market. And definitely, it's the last trading week of November, and I'm sure it's the question on most of the investors' minds right now is Bitcoin going to cross the $100,000 level? Is Bitcoin going to cross it and stay above, the 100,000 level? Because it seems like if it touches the 100,000 level, what next? Is it going to come all the way down and maybe we'll see the sell-offs and maybe another bear market, comes at this point? But if you look at the Fear Greed Index, it's still pointing to, bullish sentiment. Investors are still, feeling quite bullish at this point. And now, all about the what they're expecting for the Trump, presidency. He's been naming some names, for positions in his government, and who's going to be the next SEC chair? That's for the Securities and Exchange Commission in the U.S. We've heard what's happening with Gary Gensler. Trump did promise that he would fire Gary Gensler. We know the crypto community, they are quite in support of that. But, definitely a lot to look out for. Let's see if the new selections as for his government will continue to drive the sentiment in the crypto market. And we'll also get a check on if we can see how we can get more information to see what the trade is going to be, because at the end, the investors want to find a way to buy low, to sell high at this point, so you don't go buying at the top. All right, that's the show today. Thank you so much for watching. Don't forget, you can watch us again on our YouTube channel. Just flip over to YouTube, separate channels, television, and you can watch all our productions. You can also visit our website, www.channelcv.com, for more updates. Thank you again for watching. From me and the team right here at Channels HQ, it's bye for now.